Hey, it's Mike. I'm not an investing guru. I'm an average guy sharing my investment journey on the internet. In today's video, we're talking about investing in Tsly for the last 11 months using margin. As you all know on this channel, I borrow money for income. And in doing so, it's going to create a side stream of passive income without using my own money. So what I do is I have a very strong set of foundational holdings. You can invest in the S&P 500. You can invest in the NASDAQ 100. You can invest in SCHD. You can invest anything you want for these foundational holdings, but they have to be high quality. And what you do is you have these high quality holdings as the base, and then you borrow money against those holdings. So for me, I invest in Tesla as my foundational holding. Some people don't agree with that. Just, again, put that aside and imagine if I owned the S&P 500. It's about the main concept, the 30,000 foot view, not the actual individual nitty gritty here. So I invest in Tesla. My position is $137,000 and I borrow money against this position. So what I do is I invest in these things called income investments, where there's these ETFs where the companies will sell covered calls or cash secured puts against certain holdings. Some will do the NASDAQ 100, some will sell them every day, and then others will do weekly calls. And some will do individual stocks and some will do ETFs. But overall, I invest in income funds that sell options. So we're not buying options, we're selling options, investing in these funds. And so my total amount borrowed was $40,000, but then my current amount is $37,074. And that's about 20% of my portfolio, which is a very safe number. So I did bump it up from 10 to 20%, but I'm going to discuss that in the next slide. But here, the goal is, if we can borrow money at 8% and we get paid over 25%, that is a winning formula. So we get a check mark. So as you can see here, QDTE pays out 30% and Tsly pays out about 50%. So again, check mark for borrowing at 8, paying over 25%, which both of those do. So I want to discuss one of the reasons why I bumped my margin up about $20,000. And one of the reasons why I did that is because it made a nominal difference in the actual margin maintenance. So at a 10% portfolio value in margin, my margin maintenance was $61,690. When I borrowed the extra 20K, it only reflected $5,000 because you can borrow 4 to 1. And I invest in 25% margin maintenance names. So that's why if you borrow $20,000, it only reflects $5,000 on the margin maintenance. So at the 20%, it only bumped it up to $66,000. So adding on $5,000 worth of margin maintenance allowed me to invest in a more diversified fund versus Tsly. And then with the calculated payments would come out to an extra $577 a month. That is a very good formula. All right. But enough of the actual strategy. Let's just go over the numbers here because you guys want to see how Tsly is performing. So, you can see here my foundational holding Tesla. I own 834 shares, and again, about $143,000. I guess I didn't update it on the presentation, but we're going to see what the Tsly income fund is doing. So current share price $14.60. I own 1,013 shares. My total return is minus $13,000, which again, we're still in the red because Tesla has been in the red, but there are signs that it is going up because this used to be negative $14,000. So we're slowly making our way up because Tesla is going up. And then one of the key things in my investment strategy is to invest in income funds that have a margin maintenance of 25%. So if you invest in something like this, you borrow 20K, it only reflects $5,000 on the margin maintenance. Moving along, and then you can see here, this is the Tsly payment. So at the time I had 1,008 shares, paid out 69 cents a share, which comes out to $700. It did say I have 1,013 shares. With the reinvestment, I did purchase some more shares. So that's why it's 1,013 in this portion right here. Okay. But that is it for that. Let's talk about the actual margin numbers here. So again, you can see margin use 37K, which is about 20%. Again, that's still a safe number. And when I go to the actual margin maintenance here, so we're at, I went up a little bit, 67,532. So that's kind of where we're at right now. Again, super safe number. So my account value, if you go to the yearly, or let's just go all time, would have to drop below my lowest point. My lowest point ever was $118,000. So I would even have to drop even half of that. So to me, that seems like a pretty safe area to be in. All right, now let's go to the spreadsheet. So the main numbers. Overall, every single Tsly share that I bought costs about $27,660.33, and that is counting the reinvestments that I put into it, and also the margin maintenance. As you can see here, the margin amount is slowly decreasing. So now my current margin amount for this position is $17,074.71, which comes out to 60.59%. So we are getting that paid down. As you can see here, the total income, $700, and the expenses it's going to be about $133, between $120 and $133. I always account for more, and then when I actually do get charged the interest, I will subtract it from that. But then, I always set aside money for taxes. Now, most of these funds are return of capital. So until you get all your cost bases back, then they'll start charging you short-term capital gains tax. But just to get in the habit of already just recording it, I am accounting for it now. A lot of you will tell me that, why do you even do that? Because it's return of capital. Yes, I understand it's return of capital, but I'm very conservative when it comes to these numbers, and I just want to account for it when the time comes. Moving along, reinvestment, 25%. So I reinvested $175 between Tesla, QDTE, and Tsly. So I split it between the three. And then if I keep reinvesting all the funds, and what is left that I could spend on whatever I want would be $181.81. So when it comes out to a monthly yield about 0.66%, which would come out to 6% a year, and then you get an extra portfolio boost of 0.13% off of a $137,000 portfolio. Now, let's look at some of these top numbers over here. So prior to expenses, taxes, and reinvestment, the monthly yield off of the $700 would come out to 2.53%, which comes out to a yearly yield of 30.38% for my cost basis. Not what the Tsly website says. That's my cost basis. And the estimated income for the year would come out to about $8,400. As you can see here, income fund value here, price paid here, and then we're still in the red. And I haven't updated it since the last time, so I guess these are the more up-to-date numbers here. So I really haven't switched those yet, but they're kind of in the ballpark. And then this is the total income that's been paid out investing in these income funds. So it's almost $7,000 and about $900 in expenses. So if you technically make $7,000 and it costs you $1,000, pretty solid deal. And then just with taxes, I just am accounting for taxes here as well. This number is wrong. Let's just change that later. Base reinvestment, and then the net gain from just what you would have left if you reinvested it, set it aside for taxes as well as expenses. As you can see here, again, the portfolio pays out a decent amount of income. And moving forward, I'm just going to keep sticking to the plan. I guess my only change from the last video is that when I was doing the reinvestment, I just reinvested into Tsly or the other income funds. Now I'm investing into Tesla, Tsly, and QDTE. So that's kind of where we're at. But for the most part, this is the 11-month return. If you have any questions, please feel free to comment in the comment section. And then don't forget to like the video, subscribe, do all that good stuff. And then I hope you have a great day, and hopefully this opens your eyes to another option for your family to have a side stream of income. So hope you have all a good one, and take care.